Today, we're going to talk about credit reports, fixing credit, the importance of credit, anything and everything we can think of in the hour or so that we have. I've invited the president and owner of Premier Credit out of Salt Lake. This is the company that I use exclusively in helping other people. And he just walked in the door. He called me and said that he'd gotten stuck in traffic. And as he sits down, I'm going to have him introduce himself. So again, today we're going to be talking about credit. We're going to talk about what if you have bad credit. What about how to check your score? What about you just don't know? What about blank and etc. So if I can, as Dustin sits down, just pull the microphone up to you. You're good to go. See, introduce yourself.
All right. Sorry I'm late. My name is Dustin Grimnes, and I'm one of the owners of Premier Credit Consulting.
Just a second. His microphone is on. There it is. There it is. All right.
That works.
Let's do it again. Start over.
All right. Sorry I'm late. My name is Dustin Grimnes, and I'm one of the owners of Premier Credit Consulting. And we've been in business for about 3.5 years. We're located in Salt Lake City, Draper to be specific. Mm-hmm. And I actually grew up in the Salt Lake area, attended the University of Utah. And
I'm going to like you already. I did the same.
Good for you. Excellent. And, had an interesting experience where I was a victim of identity theft. And so that was about 10 years ago. And learned a lot about credit through that experience. More or less that there was really no one out there along the lines of free information that I could kind of source. And so went through about a 3-year process of trying to understand how you overcome something like that. Because truly, when it wasn't you, there's not a lot of information that's out there to help you fix your credit.
Now, wait a second. So someone goes on the internet and starts Googling this kind of stuff. You're saying it's not out there. Tell me what's not there.
Yeah. So, for example, in my particular situation, I got a knock on the door one day. Was going to school at the U, and it was a constable serving me with documents saying, "Hey, look, you owe $3,500 on a Capital One credit card." And I found myself in a situation where I was looked at this guy. It's embarrassing. I have roommates, and so I took the information, and not knowing, hey, look, I actually have a credit report. You know what it is, right? A credit score, and so I ended up jumping online and researching, typing in, what is identity theft, what is, or where can I obtain a copy of my credit report? And that's where I started going to websites like Equifax.com, Experian, but even there, nothing. At the very, very bottom, information if you believe you're a victim of fraud. And then a nice little paragraph about what you can do to fix it. And it's a road to nowhere, in my opinion. And the FTC provided some information. The FTC.gov is their website. And it's something that's probably updated on an annual basis. But they say it's the fastest growing crime in the nation. And yet it's probably the most... We lack the most resources in that arena. Helping people who, from the very simple process of understanding a credit report to understanding how to fix something that might be wrong. And so I think there's the bottom line with me was defining what is something that's inaccurate and not mine versus something that is accurate and a mistake that we've made. And how do you differentiate the two and figure out how you can fix those things or improve those things.
So how did you fix yours?
Yeah, it's a great question. So I actually contacted attorneys. I had heard or happened to fall upon credit repair companies, researched them, and then what I ended up doing was really doing my due diligence to try and figure out, okay, do I pay somebody to help me do this, or what do I do? And so I started calling these companies, pleading with them, and by companies, these creditors.
On your credit report.
And
Yeah.
I ended up having about, probably almost $100,000. I mean, it was
Really?
it was really significant. I was, I served a 2-year service mission and came back, and somebody had just had a 2-year
Oh, wow.
party with my
The
credit.
whole time.
Yeah, the whole time. And so everything from a truck, car, satellite TV, credit cards, bank accounts. And so I called them and I just said, hey, this isn't me.
Mm-hmm.
And interestingly, they said, well, it's not our problem. you owe us $3,500.
Mm-hmm.
And so I'd wait a week and I'd call them back, and I'd wait a week and I'd call them back. And the process just got really frustrating. So
Yeah.
it took me, like I said, about 3 years. And what I learned is that I contacted our state attorney general,
Yeah.
the office, and they that's where they tipped me off to the FTC's website.
Mm-hmm.
Through the FTC's website, I found something called an affidavit of forgery, and it's a very powerful, yet I think it's an underutilized document for those that are victims of identity theft. But what I ended up doing was going to the local police department, opening up a police report or a case number, if you will, and then taking that and putting that into the fraud affidavit. And I had to spell out every single account and say where I was.
How many hours to date did you spend?
It was ridiculous. It was, being a full-time student, young guy. And so it probably was, 5+ hours a week, if not more. And it's not the paperwork, really.
Yeah.
Finding the time wasn't the biggest problem. What for me was just the phone calls.
Yep.
Calling the same department over and over again.
Mm-hmm.
And talking to somebody different who didn't understand my situation, and I don't blame them. They really just didn't care.
Yeah.
They have thousands upon thousands of clients.
You're someone on the computer screen.
Yeah. Yeah.
And they hear stories all the time.
All the time.
It's not
Hey,
mine. Oh,
yeah.
sure.
Oh, sure. and the sooner I realized that, I think that's when I finally said, okay, this has got to go away.
So hold on a second. Let me just ask a question. What you just said to me sounds like we shouldn't take this stuff personal.
Yeah.
And we always do.
Always do.
Walk me through how you got over that.
Yeah. So, it was probably like my 10th call to one of these big banks where I spoke with like the 10th different representative.
Yep.
And I said, I would get really upset.
Yeah.
I would take it personal. Like you said, it's a great point. But eventually I just said, hey, look, this is mine. I have to own it. It's not going to go away.
Mm-hmm.
The Fair Credit Reporting Act has, and we can talk about that in more detail later, but it basically has allotted somebody 7 to 10 years for negative information to report on your credit report. And so through my research, I was like, okay, well, worst case scenario, this is going to be on here for 7 to 10 years.
7 to 10, yeah.
And the moment that I just started saying, I got to move on with my life, I got to finish school, embrace this unfortunate event.
Yeah.
But I'll tell you that when you go in to qualify for a loan and they tell you that your score is a 500 or a 520, and that, look, we'll work with you.
Yeah.
That's when I said enough is enough.
Yeah.
This is something that I got to do, and that's when my calls became very direct. The purpose of those affidavit of forgeries, I sent them in and just said, hey, look, this is your issue, deal with it. And it just one after another, it started going away. And interestingly, everything came off except for one account. I had one company that pushed back, and they are a company that rode out for 7 years a $300 collection and ended up falling off of my credit report. And it was unbelievable the difference even that made in that coming off. So I've been an advocate and very passionate about making sure that people understand that this is one of the single most important factors in their lives that helps them obtain financing, goods, and services. We're talking about mortgage services. How are you going to be able to qualify for a house, live the American dream, if you can't improved credit scores, not only to just qualify,
Yeah.
but to qualify and say, hey, look, I got a great rate.
Yeah.
So, at the end of the day, we just don't do a good enough job starting in the grade schools all the way up saying, look, there's a thing called a credit score right now.
Yep.
And it's a big deal.
Yep.
So,
Because how many times does it happen that a college student goes into it, and of course they start warning them now, but they get 100,000 offers in the mail for the credit cards, and if they've been taught well, sure. If they haven't, they might fall in right from the get-go.
yeah.
And so if they just knew, hey, be aware. I know it sounds like there's $5,000 sitting there ready for you, but
Yeah.
just be careful. Let me tell you why and how this works out.
Absolutely. Yeah, that's the everything from the financial literacy side to the impact of how credit just works. We have a lot of clients that'll come to us and say, if I just had known,
Yeah.
and I guess that's the way it is in everything, but that's, you're playing with fire sometimes when you're borrowing money and you don't know what the ramifications are in the event that you use it wrong.
Mm-hmm.
So
Let's dive right into it.
okay.
So what would be step one? Let me give you a scenario.
Okay.
I go try and get a loan, maybe for a house, maybe for a car, and I find out there's a few collection accounts on my account, maybe a tax lien. It may or may not be, probably not in this scenario, be identity fraud.
Mm-hmm.
Well, I didn't know about those.
Yeah.
I mean, by the way, in my experience, almost 20 years in the mortgage industry,
Yeah.
in medical bill, everybody has a medical collection. There's something about the medical billing that if you send it in the mail and something doesn't happen, automatically right to the collection agency, and they're like, "What happened? I thought my insurance paid it."
Yeah.
Because there's how many people are involved in a medical bill, and I've seen hundreds of those. And then it's always the little thing, like it's always the $100 balance, the little credit card that you just kind of say, "Oh, it's not that big a deal," and it goes a month or two, and you just don't think about it, and all of a sudden you have these 30-day lates or 60-day lates, or maybe it was 0 down, no payments until, and then it comes up. But so that could be a situation where I truly was at fault. But what if I wasn't? What if?
Yeah.
So we have these little collection
Sure.
accounts, 30-day lates and stuff like that, and I find out my scores drop dramatically.
Okay. That's a great.
What
great
do I do?
question.
What's step one?
Okay. So step one is there's a statistic, and I wish I want to reference it, but I don't want to be too far off. We have the ability to pull our credit once a year through annualcreditreport.com. And
Now you say we. Who's we?
so everyone,
Anybody.
that's out there, any consumer, as a result of the Fair Credit Reporting Act. So everybody watches TV.
Yeah.
They see the guitar band out there, freecreditreport.com. Well, all of these advertisements for credit reports,
Yes.
in some way or another, you're going to pay for it.
Right.
Right. And annualcreditreport.com is really what's sanctioned by or was brought about with some legislation, which basically, look, everybody needs to have the ability to check it once a year for free.
And why would you check it?
And the reason why you check it is because those events that you were talking about happen all the time.
Yep.
80% of credit reports contain at least one item that's wrong. And it's inaccurate.
And I've seen that, by the way. I'll give my little testimony to that.
Okay.
I've seen it.
Absolutely.
People go, what?
And that's, when you take it even a step further, they've said, okay, well, yeah, but maybe it's my name's wrong or my address or something like, well, we've taken a step further. 20% of those, of that 80%, are at least serious enough to keep you from being able to qualify for a home, a car, a credit card. And so, well, you say, oh, okay, well, 20%. Well, there's 250 million credit reports that are out there. I mean, that's a lot.
Yeah.
That's a big deal. And so, let's say that step one is check your credit report regularly.
Yep.
You get a free one once a year, and don't get hung up on the score, because it's all about the content.
Yeah.
You can help them with the score, right? You can say, hey, look, this is the score that matters when you want to buy a home. But for now, let's focus on content. So if you see something wrong, then the first thing that you do is you have a right as a consumer. Number one, if anything is inaccurate, unverifiable, outdated, or misleading in any way, then it has to come off.
What if you don't know?
And if you don't know, then that's where you need to come to us and you need to ask a question. But no, right away, I think the most important thing is to take a highlighter out, print off the copy of the credit report, go through and highlight everything. But there's nothing on there that says, hey, look, this is a step-by-step guide to understanding whether or not something is accurate or not. And really, at the end of the day, if you believe something's not right, or if it's not accurate, or if you even question it at all, there are tons of resources available to you where you can say, all right, look, I'm gonna do what Dustin did. I'm just gonna go to the FTC's website, and I'm gonna ask the same questions that he asked, and I've got an FAQ site there where they can just go through, or they can
just in case someone doesn't know what FAQ is.
Yeah, frequently asked questions.
Thank you.
Or they can go to our website, which is www.premiercredco.com.
Yep, premiercredco.com.
And I highly recommend developing a relationship with a mortgage professional, such as yourself, Tom. I think that in the event that somebody pulls a report, they can say, hey, look, some of the things I'm going to do in my life that make a big difference are buying a home.
Sure.
And so, Tom, do you think you could help me with this?
Yeah.
Here's a question. Even if they're probably going to buy a home 5 years from now, it's probably worth the conversation.
And I'll just let you know. So that's what I promote, and that's what this show truly is doing. Is that I'm bringing all sorts of people like yourself, because I want clients that eventually will buy a home or refinance or move. Who knows what their plans are? Just come in and talk to us. And if they think they're not ready yet, come talk to us.
Yeah.
Let's see where you're at. Let's keep it on top. Come and I'll put you with the professionals, including myself. So your advice is something that I believe in wholeheartedly.
I think it's the smartest thing that someone can do, because if you wait, which is what we see 99% of the time, it's too late. Interest rates were, down in the 3s.
Yeah.
And now we have people who come in and they say, well, how do I get that?
Yep.
And we say, well, it may be long gone.
Yeah.
But they're still amazing.
Sure.
And the opportunities are still there to strike while the iron's hot. So somebody who's suffered from a bankruptcy, or for example, your example, which was, let's say you find a medical collection on there.
Yep.
Don't hesitate.
Yep.
Pick up the phone, give Tom a call, or jump on a website and just go to somewhere where it's free information.
Yep.
And just look and say, okay, look, I don't remember this ever happening. And what actually we see quite often is you go to the doctor, you have a copay.
Yep.
Perhaps you didn't make the copay, and so they send you the bill in the mail, and 30 days goes by, and like you said, you don't jump on it.
Yep.
They're really not going to drag their feet. It's probably going to end up on your credit report sooner than later.
Yep.
And the consequence of that is significant. I mean, it could be 20 points, 50 points.
Yeah.
But ultimately, if the higher your credit score, the larger the drop in points. And so if that may not make a whole lot of sense,
right?
But we had the unique opportunity to sit in on a conference call with the Federal Reserve of San Francisco, and there was a chief FICO scientist on the line. And so, you can imagine anybody that was interested in credit wanted to ask all the questions, such as what happens if.
Yep.
And he provided a document, which I'd be really more than willing to share with you and any of your listeners that reach out to you that say, hey, look, could you email me that document? But it's an if-then scenario. If your credit score is a 720 and you have one late payment, this is probably what you're going to see in a score drop. And then what's really interesting about it is how long does it take to get back to that 720 credit score?
Yeah.
Is it a year? Is it 6 years? And if you don't do anything about it, then it's probably going to take some time. So,
well, let me break for just 1 second.
Yeah.
You're listening to KTMP 1340, your hometown station. And our show is brought today by Guild Mortgage. That's my company. Now, remember, I have to do some specific little words and numbers, so I'm going to do this as fast as I can. Your mark, set, go. This is brought to you by Guild Mortgage Company, NMLS 3274, Equal Housing Lender. I'm Tom Stone, the NMLS Loan Officer, number 257849. The information contained in this training has been prepared and distributed for educational purposes only and do not represent the opinions of Guild Mortgage Company. Whew. How'd that go? Is that all right?
That was great.
I'm
impressed.
You still with me?
Yeah, that was impressive.
We got to take a little break there. Let's move on. Now, we've talked about the score, and we've referenced it, and you and I understand it, but there may be many that don't. What is a good score? What is a great score? When should I worry about it? What's the bottom? What's the top? Tell me how that works, and I'd like to go into the coding too.
Okay.
Some of the little details of what affects it. It isn't just a late payment.
Sure.
So let's talk about the score for a second.
Excellent. Great question. Well, let's start with, let's back up a little bit, and this is really how we educate. We provide some credit education courses a couple a month. Mm-hmm. Where we start is we call it a risk score, because that's essentially what it does, is it analyzes or assesses risk.
Yep. What
is the likelihood that you're going to default or fall behind, right? So I go in and I buy a car, and the individuals that are assessing my credit worthiness are going to say, all right, if we were to give a grading system of bad or poor, good and excellent, those are all going to be based off of the likelihood of us being able to give the best interest rates that correlate with those. So there's a company called Fair Isaac Corporation, which is the FICO score. Very, very smart. They, quite some time ago, over 50 years ago, developed a score or risk analysis that could be sold. And what it basically does is it assesses the consumer's risk. Back to that, how likely are they to default? So what they've done is it started off with essentially, all right, well, let's create a mathematical equation, an algorithm. And within that, let's say that in the event that something happens, positive or negative, scores are going to go up or they're going to go down. So let's start with your question, which was, what's a good score?
Yeah.
Well, a good score could be, it's all relevant. So it could be a 680, and that's what they say a good score is anywhere really in that 680 to 720 range. Excellent credit is 720 plus. And that's probably consistent with mortgage lending. Somebody who really has that 720, maybe even a little bit higher.
740 is our top level.
Excellent. And so that's where they're going to say, that's where someone's going to get the best bang for their buck. Poor credit is going to fall when you drop down into that 640 range and below. And so that's what everyone focuses on. It's really funny when you get out there, the question is always, what's your credit score? What's your credit score? And what we say is, what's your credit content? What are the things that you have on your credit report that are helping you? What are the things that you have on there that are hurting you? And how FICO assesses all of this is they say, okay, well, let's put together a pie chart, for example, a graph. And let's say that 30% of your credit score is made up of how well you utilize credit cards or revolving balances. So your local bank card, an RC Willey revolving credit account, things like that, American Express card.
Department stores.
Yeah, exactly. So how well you use that, what is the available line of credit you have, and what are the balances that you maintain? 30%, okay? So a hefty amount. Then they come back and they say, all right, 35% is going to be made up of your credit history. So how well you've paid, how long you've had the account.
So the late payments is
late payments, exactly. Yeah. So you can say just as much as something that was negative, like a late payment, would have a significant, it's the highest percentage weight. You could also translate that over to how well you've paid for something. Let's say you had an account for 10 years and you've never been late. Well, that's going to be heavily weighted in a positive manner. Then you jump into all the other ones. The areas that people focus on a lot, which are inquiries. How many times can I pull my credit in a 12-month period of time? The difference between hard and soft inquiries. We can talk more about that. You also have types of credit. So You have revolving lines of credit, which are the department store, local bank cards, big bank cards. You have installment lines of credit. So
Car loan.
Yeah, car loan, for example. Mortgage accounts.
Mortgage.
A handful of different types of credit. And those are all going to be, interestingly, they do look at the type of loan that you have. They don't look at necessarily at interest rates.
Right.
They don't look at your debt to income ratio.
Right.
But they want to look at what type of loan is this. And so they take this whole thing and they put it together and they say, all right, we're going to take these percentages, and let's use me for example. And Dustin has a $1,000 line of credit at his local bank. And every month he maxes that out.
Yep.
You know, I go and put everything on it and I max it out.
Thinking you're doing a good thing.
Thinking I'm doing a good thing.
It,
exactly.
And I pay it off every month.
And I pay it off every month because I practice what I preach, which is I don't want to pay interest on this card.
Right.
But interestingly, what happens is that bank reports information to the credit bureaus, which are Equifax, Experian, and TransUnion, and there are others, but let's talk about the big three.
Right.
And so let's say my payment's due on the 5th of the month. But on the 25th of the month, the bank sends off my credit usage to the credit bureaus. It's captured. So instead, and me thinking, all right, well, it's the 25th. I can make my payment on the 5th. I'm at about $700 of my $1,000 available line. No big deal. Well, it is a big deal when the bureaus pull it, because now you're $700 out of $1,000, 70% utilization ratio, which shows, remember, back to our risk assessment, you are financing a very large portion of your available credit.
Yep. You're maxing out your credit cards.
Maxing out your credit cards.
Yep.
And remember, this is an algorithm. This isn't a human element.
Back to the personal thing.
Exactly.
Don't take this stuff personal.
Don't take it
Figure
personal.
out how the numbers work.
Exactly. And then manipulate it so that it works for you.
Yeah.
And so
now manipulate sometimes has a negative thing.
Exactly. But in this particular situation, you can say, you know what? Look, I'm going to take that $700, even though they look at it and they say it's bad. You know, but I know that I pay that off every month, and I'm using it. I've never been late.
Right.
So,
in fact, you don't even pay interest.
Yeah, I'm not even paying interest, right?
And it shows negative.
Exactly. And so it's showing
That's
negative.
Not fair.
Exactly. and I'll tell you, Tom, most people just don't know that.
Right.
They don't know that if your credit card balances are really over 30% of the available limit, then when they come in and they pull a credit report with you, there's going to be a code in that credit report that says balance to limit ratio is too high.
Too high.
Yeah, proportion of balances is too high. And you're sitting there and you're saying, I pay this every month.
Yep.
I've done it so for the last 10 years. And you're probably getting benefit from that, right? Because you're paying on time.
Getting some points maybe.
Yeah.
You bet.
But are you maximizing the full potential? Well, let me tell you how you can. If you're not going to buy a house for a couple years, it's probably okay. You can do this every month.
Sure.
Because you're not pulling your credit.
Right.
And it's amazing. It's instantaneous. So the moment that you do change something or it's updated, it'll reflect in the score increase. So what you do is you say, hey, the next time I'm going to qualify for a major purchase, I'm going to make sure that that balance is below 10% of whatever my available limit is. All right, so I'm going to be one step ahead of the game here. I'm going to call Tom and say, hey, I want to pull my credit to qualify for a mortgage. However, let me go and make sure that my balance to limit ratio is low.
Yep.
And when they go pull credit with you, scores will be higher.
Yep.
So
Immediately. The very next month.
Yep. Immediately. The moment that the bank reports that low balance, remember we talked about it. It was 30% of that overall equation. That's a big deal. So if you have multiple credit cards, think about that. Plus it's aggregate, which means the total amount of all of them. So you take the total available limit and the total balance. So if you're really going to purchase a home, you want to think about it from the standpoint of how do I prepare myself with that 30% ratio to get in the best possible qualifying standard.
Right.
And that, no matter, we get asked this all the time, does it matter if it's a $500 credit card? Absolutely. It'll blow you away.
It'll hurt you more.
Yeah, because it's quicker to the limit.
Quicker to the limit.
Exactly.
Now, the other thing we can do and I'm sure you're going to get to this,
Mm-hmm.
but if I have a $1,000 limit and I want to keep it at 700, go to the bank and get your limit raised.
Exactly.
And you don't have to change what you do.
Not at all.
So if you say, hey, I need to raise my limit to just do the math, keep it at 30% or 10%, whatever number you want to play with, qualifying, if you're good with your credit score, they'll say, okay, sure.
Absolutely. And
So
that's something that's underutilized as well.
Mm-hmm.
So it's not used as frequently as, and I think people are intimidated by that because they heard so much about the credit crunch.
Yep.
And availability of credit.
Mm-hmm.
But it's there.
Yeah.
And if you have good credit, you can get in there and ask them to increase those lines. You can always ask, and that's a big deal.
Mm-hmm.
So another interesting point is the 35% factor that we talked about,
Yes.
which is the credit history. And so that being the concept that you can, if you have late payments, or if you have a collection account, or if you have public records such as a tax lien,
Mm-hmm.
those are the types of things that if they are reporting inaccurately, or if they're reporting accurately, you can still do something about it.
Now, guess what?
Yeah.
Let me just see here. Monroe?
Hello?
Monroe? This is
Hello?
Tom. How are you?
Good.
Can you hear? So, Dustin, guess what? While we were chatting, someone just called in. Monroe.
The phone is breaking up.
Is the phone breaking up?
No, it won't pick up.
Will you go ahead and just tell your story?
Hi, I'm Monroe Gibson, and I live here in Heber, and I came to Tom Stone about a year ago, and I can't appreciate Tom enough. He worked with me for an entire year, holding my hand, working with me on my credit, and I don't know that there's too many people out there that had as bad as credit as I did. And Tom helped me through the entire process, and now that the year has gone by, I think my credit score was like around maybe less than 300, and now it's almost 700, and that's all thanks to Tom and his process there.
And Premier Credit, huh?
In fact, today, Edge Homes is breaking ground on my wife and I's new house here in Heber City, and we can't explain how excited we are about that.
Yep.
You can probably hear the shakiness in my voice.
Monroe, repeat what you told me, what you're going to do in your living room when you walk in that door.
What's that?
I said, when you walk in your living room of your new house, what did you tell me you were going to do?
I'm going to drop to my knees and cry like a baby. I will be overwhelmed with joy, Tom.
When you came and came and sat down with us and we pulled your credit, what did you tell me before we ever pulled credit? What was the hope? What did you think was the option for you?
You were kind of breaking up there, but I think I got some of what you said. Is I just wanted to get my credit in line, and you were definitely the guy to see for that.
Can you tell me about your experience with Premier Credit?
Oh, it went really well. They handled everything. They talked to me every month, and they took things off my credit and helped me pay the things on my credit, and it just I can't even begin to explain how great the whole process went.
What part did you have to play? So obviously there were some people helping, but what part did you have to play in this process?
I had to stay on top of it and make sure I did my part,
Mhm.
keep in contact with the creditors and make sure that I made my end of the bargain hold up, because you definitely don't want to drop the ball through the process. And they helped me establish, revolving credit like you were talking about
Mhm.
earlier, and just pay. I started off with just a $300 limit credit card and paid 30% of that instead of maxing it out.
Mm-hmm.
You just pay 30% of that every month, and you get some really good revolving credit, and that really builds your credit score a lot.
Tell me what other good things have happened to you since you started this process.
Now I have every day in the mail, I get I get stuff. People trying to give me credit now, where before they wouldn't touch me with a 10-foot pole.
Tell me about your marriage and stuff. Tell me all about positive stuff.
What's that, Tom?
Tell me about your marriage.
Oh, we got married this year, and my wife said she probably should have ran a credit check on me before she married me. But it has really made a big improvement in both of our lives. I can't believe the difference.
You know what's been fun for me, Monroe, is I met you the first part of this year and saw this process and saw how hard you worked at this, is that I saw so many other good things happening to you. You were able to meet really the love of your life and get married. You had your settlement settle. Just so many other things, and it's. I'm not saying that I or anyone else had anything to do with that, but it is interesting, as you took control of your life with some assistance, how many other things started falling into place. Anyway.
I wish my phone was working better, but at the moment it's kind of.
Well, thank you. Thank you for calling in, Monroe. That was awesome.
Oh, you're welcome, Tom, and I recommend anybody out there that feels like they just couldn't make it for some reason that, oh, my credit's too bad. That's not true.
Mm-hmm.
That's not true. You can do it. But it takes hard work, too.
Yeah.
It takes dedication. And I wanted to wish everyone out there a Merry Christmas. I love Heber and the Heber Valley here. I love Tom Stone and his outfit there. If it wasn't for them, I wouldn't be anywhere close to where I am today. And Merry Christmas to you all, and thanks for having me on the air here.
Thank you, Monroe. Appreciate it.
All right, Tom.
See ya. Bye-bye.
Bye.
You back with me, Dustin?
Fantastic, yeah.
For the record, I had hoped that I could have Monroe on. I didn't know if I dared call him, and he did it on his own.
Oh, awesome.
He's my favorite. He is so much fun to be around.
Really?
Yeah. And again, I sent him to Premier Credit.
Yeah.
And one thing at a time. One thing at a time. Do you know Monroe?
I don't.
So Dustin's the owner, so he doesn't have the one-on-one stuff.
Yeah.
And in fact, he's talking. He's like, "What's going on?"
This is a great story.
Oh, it is so much fun. And again, Monroe said it better than me. But the fact is, he came in at a request of a realtor and said, "Well," because I'd said to the realtors, "I don't care who, what, where, and why. I don't care where they're at, what position they think they're in. Just have them come talk to me. Let's start a process." And Monroe did, and he's like, "I'm not sure I'll ever be able to, but." And I said, "What do you want?" And he says, "What do you mean, what do I want?" And I said, "Would you want to buy a home if you could?" He said, "Oh, boy, I just don't think it's possible." And then he got his score with assistance of Premier and some cheerleading on my part. And
Absolutely.
a little education. And he went and accomplished this and got his score high enough to get a good mortgage, to qualify first of all, to get a good mortgage second of all, and to get the house that he wants. He didn't even have to. He didn't just get whatever. He got the one he wanted.
The one he wanted.
Yeah.
Yeah, that's the story you want to hear.
So anyway, thank you very much, Monroe. You're one of my favorite people, for sure. Thank you very much for doing that.
Excellent.
Dustin,
Yeah.
let's go down. I want to talk more serious stuff. I want to talk about foreclosures.
Okay.
I want to talk about bankruptcies and repossessions.
Sure.
Because that's heavy-duty stuff.
Yeah.
And I want to ask, kind of involve your company. So that, because really when you get to the heavy stuff, you generally, I mean, you can still try to do it on your own.
Yep.
But at the time and the phone calls and everything else you involved.
Yeah.
So tell me how the heavier, bigger stuff. We talked about the credit and keeping that at a certain level.
Yeah.
But talk to me about if I was bankrupt, foreclosed specifically, or had a repossession.
Okay. We'll start with the bankruptcy. So typically what we see is there's a Chapter 7 or a Chapter 13 bankruptcy, and those are on the personal side.
Yeah.
And what we'll see is someone will wait. The mindset is, I'm going to file bankruptcy because it's too far gone.
Mm-hmm.
And so they'll meet with, interestingly, they're in the market to perhaps buy something, and then they end up meeting with an attorney and filing bankruptcy. But where we fall in is the restoration process.
Mm-hmm.
So most people think, okay, I filed bankruptcy and it's going to be a long time.
Right.
Because they hear things like 7 to 10 years.
Mm-hmm.
And because bankruptcy information is public record, they instantly assume, and really, we really do, which is this is going to take a long time, and the road or path back is I don't want to waste somebody else's time.
Right.
I don't want to call my loan officer and say, hey, can you pull my credit or can I qualify? Because I'm just going to assume, hey, I can't do it. It's embarrassing.
Yeah.
Right? And
I've had actually someone say to me, I feel like I'm standing here in my underwear.
yeah. Yeah, it's a great analogy. I mean, they really, you feel like you've lost everything.
Mm-hmm.
And for me, the experience that I went through, I have tried in building a business to say, we're not talking about deadbeats.
Mm-hmm.
We're not talking about people who don't pay their bills. These are good people.
Yep.
I consider myself a good person, and look what happened to me.
Yep.
There's a second chance for everyone, and sometimes we need to learn a valuable lesson. And so what ends up happening is a bankruptcy, there's a discharge date.
Yep.
And so that may be 2 years, for example, to be able to qualify for a mortgage. But what happens is, unfortunately, we see a lot of our clients come in with right at about 18 months.
Mm-hmm.
They'll come in, they'll say, hey, I want to qualify, and our message is come in sooner.
Yep.
Go contact Tom sooner. If you're in a bankruptcy, I'm sure he'd love to hear from you and have a conversation about how you can get on the path to owning a home in about 2 to 3 years.
Yep.
And so what we do with a bankruptcy is the whole process goes through, I guess you could almost call it a cleansing process. You're getting rid of debts that you have basically said, look, I can't afford, or I'm not able to make these payments. Mm-hmm. And so what Premier Credit does is we step in after the bankruptcy process, and we provide a 100% free analysis of your credit report. And I keep talking about reviewing the credit report, and it's done so little that even somebody who's coming out of a bankruptcy, that's one of the most important times to do it. I'll tell you why. You can look at a credit report, and I can pull the schedule for a bankruptcy, which is all the documentation that was of all the filings of the items in the bankruptcy, and I can go back and forth, and I can show you, okay, look, this one said that it should have been included in the bankruptcy, and it should have a zero balance.
But sometimes it doesn't report that way.
And they don't report that way.
So they think they've gone through bankruptcy. They think that it's zeroed out.
Yep.
They signed the dotted line. They even got a discharge paper. It must be reporting correctly.
Must be, right?
Must be right.
It's just
someone's going to make sure that happens.
Exactly, and it's not going to be me. And all too often we just assume that somebody's going to do it for us.
Yep.
So
well, it's the right thing.
It's the right thing.
That's the whole personal thing. Well, they understand the kind of person I am. I didn't mean for it to happen.
Yep.
So I'm sure someone will watch out for me.
Absolutely. And you nailed it right on the head. If you can take ownership of your credit report and say, all right, look, from here on out, from listening to this radio show, I am going to own my credit report.
Yep.
And I'm not going to fall victim as a result of not being aware. And so what happens is you have two places on the credit report where the bankruptcy can report. One is in the public record information.
Yep.
It'll identify the type of bankruptcy, the date that it was filed, the date that it was discharged or dismissed if you didn't complete it. Mm-hmm. But everybody forgets about all the line items.
Yep.
What about that account you had down at the department store, and did they update it to a zero balance?
Are you telling me that'll affect your score?
That will affect your score.
Even though it's wrong?
Even though it's wrong. So that's bankruptcy,
Yep.
okay? So what we do is we jump in there, and I'll tell you, a huge difference with our company and any other type of credit service organization is that we don't just write letters. We don't consider ourselves a dispute mill, if you will, where we're just going to send out letter after letter until it's fixed. We have a handful of wonderful employees who are very passionate about their job.
Again, I know this
Yes.
because my clients have told me so.
Absolutely. And we empower them to get on the phone, to make phone calls, to say, look, let's skip this whole process of sending 20 letters. This is wrong.
So what you're saying to me is, as an employee in that position, if they send off a letter, they feel like they've done their job.
Exactly.
But yet the letter takes time in the mail, whether
Yep.
someone reads it in a timely manner, and then there's this person, the client, it got mailed, and so they're waiting to hear the very next day.
Absolutely.
They want to know, but yet the process of whoever else is involved, again, we think because we're thinking so much about it, everyone else is too. But to get on the phone
Yep.
and to make a phone call in addition to the letter following up,
It's huge.
It's huge.
If we again, we assume you phrased it perfectly, that the person on the other line receiving that letter is like, oh, let me jump on this right away.
Mm-hmm.
And in some cases, it may not even be a person. It might be some automated system. And so we just try our best not to leave things to chance. And so we'll call and say, that item, we've sent you a formal request.
Mm-hmm.
It hasn't been updated.
Mm-hmm.
You need to make sure that it's changed because it's affecting the way that this report is reporting.
So the letter itself is like I don't want to say an accountability. It's something that the person has to, on the receiving end says, oh, this is what you want.
Exactly.
And
A
then
formal
phone
request.
Call, a formal request. That's what I want to say. A formal request. And then the phone call is to say, hey, you have the formal request. I'm following up.
Absolutely. And we do this with a lot of our big accounts. So, if we have a medical collection or something that comes through, a lot of times sending a formal request or an investigation
Mm-hmm.
to the credit bureaus or to the creditor to say, this is reporting inaccurately. Here's the account number. Here's the date that it transpired. Here's some supporting documentation. And it'll get fixed.
Mm-hmm.
But a lot of times with foreclosures, short
Yeah.
sales, bankruptcies, big collections, repossessions, it's just you send them, and everybody hears it. You read it in the newspaper, stacks and stacks and
Yep.
stacks of complaints and requests. And so if the squeaky wheel, is going to get the grease, it's the same analogy here where if we call and we get the right people on the phone, then ultimately we're going to get some people that get good results.
Mm-hmm.
And in turn, that's what it's all about. Because in the end, we can send letters all day long, but if 6 months goes by and we don't have anybody, and they're still sitting there, it's right there in front of their face.
Mm-hmm.
But for everyone else, they've got 100 other things that they're worried about.
I'm going to do one more. I'm supposed to do this, so I
Yeah.
got to make sure I
No.
do my little part here again. So you're listening to KTP 1340 AM, and the show today is sponsored by Guild Mortgage. I did all that other stuff before, so I think I'm good with all the numbers and the riff-raff stuff I have to say. It's important for those who are listening to care. Anyway, back to foreclosures and situation.
So we've had bankruptcy. Let's jump into foreclosure and short sale.
Let's do that.
So we get the question, which is, all right, I had a foreclosure, and then we'll get a question from somebody who had a short sale, and they'll say, what's the difference? What's worse on my credit report? And what we have, I guess the simple answer is we don't know.
Mm-hmm.
FICO, which is, again, that score we talked about, they don't release this all-powerful algorithm, which basically has stated, hey, this if-then scenario, this is what happens.
Yep.
But what we have is a lot of records. We've got a lot of experience. And so this is what we've seen. Late payments produce foreclosures. Late payments produce short sales. If you're 30 days late, you're then going to be 60, 90,
So
120.
is it a double hit then?
That's a great question. So what ends up happening is every single time you have a late payment, you're going down a road to basically you're going to incur a notice of default.
Mm-hmm.
You're going to be put into a situation where you're going to get the notice that you're late, that you're in jeopardy of losing your home. And so one or two things is going to happen. You're either going to work really hard to sell your home, and you may have to sell it short, or you're going to foreclose. And so when that does happen, the second hit comes when the reporting information hits the credit report, which states settled for less than full balance, which is going to be a short sale, or foreclosed, or foreclosure proceedings started, something to that extent. And so what ends up happening is you have all these late payments that incur, and those hurt.
Yep.
Those are, remember, 35%. Those are significant. And so what you'll see is a lot of the big point loss, the deficit comes in the late payments.
Late payments.
30, 60, 90, and boom, you're at one time 700 plus. Now you're low 600, high 500s. And when that foreclosure hits or short sale hits, it's not like you drop another 100 points. It may be that you stay where you're at, but there
of
is
rates.
that consequence.
So let me throw something out here, and then I want to talk about the solution. So the one thing that people need to understand, if they've had a foreclosure, a short sale, deed in lieu, basically it's all the same thing. It really is. particularly from the mortgage standpoint.
Yes.
If your home went into a notice of default of any way, that's basically treated the same way, and you have to wait 3, 4, 7 years, depending on what kind of loan you're going after. The other thing that's important to know is that the date of that 3, 4, 7 years you're looking for begins when the home is sold. So people think it might be when they walked out the front door. Nope, then it goes back to the bank. The bank then, and lots of times when it's sold, the bank buys it back. Because again, the person owns it. Even though the bank has a lien against it, the bank may buy back the property from you, and that does consider the date that you can start the 3 or whatever time frame you're looking for. So let's take that. So if you can do your math, you got to look, and sometimes you don't know it. In fact, most people don't know the date.
Yeah.
You have to go find through a title report or the county recorder, when did that actually happen? When did the sale happen? We have to go get a document, and we find that date, and from that date is when we can say, okay, it's been 3 years. It's been this, whatever. But let's talk about from your company's standpoint, cleaning it up and getting them ready for that 3, 4, 7, whatever loan they want to do, 3-year time frame.
Excellent. So that's gold what you just said, because every client that we have that walks in our door, they, for the most part, it's such a confusing process.
Yes.
And so first...
And emotional.
Yeah, absolutely.
So when you throw that in there too...
Oh, yeah.
I mean, we keep talking about how this is personal. That's personal.
Absolutely. Yeah, I mean, an interesting fact, and maybe where it's originated from, we don't know, but this is... if you were to ask about 3 or 4 years ago, if you were to rank home, automobile, and credit cards, how would you rank those? People would say, all right, well... Number 1 is my house. Number 2 is my automobile. Number 3 are my credit cards.
Yep.
That switched, and it went to number 1 is my credit cards. Number 2 is my automobile, and number 3 is my home.
Yep.
People were more concerned about getting by than really that roof over our head.
Yep. Because they can find another one.
Yeah, we can find another one. And so when you ask that question, the solution base is, all right, let's start with the beginning. When was the first late payment? Okay, and let's go back and source that. What we do on our end is typically request what you sourced, which was a chain of title.
Yeah.
We'll say, can we see that? Can we see how this really came to pass? Once we obtain all that documentation, we'll go back and we'll say, we're not one of these companies that's going to say, look, this is not a real foreclosure. We're not going to try and play that game. And send that message, because in the end, if it's accurate, it's going to be verified.
Yeah.
But what we end up doing is saying, if you had a foreclosure, even if you go in and let's say they come to you, Tom, and they pull a credit report, ultimately, even if it's not reporting on the credit report, if you pull the chain of title, it's going to be there. And so whether it's on the report or not, it's going to have consequence. So what we do is we say, how do we mitigate? How do we build this credit report so that he's not or she's not a 620.
Right.
They're a 680 or a 720, and we've got some time. So 2 things. One is you've got to start. If it was me and I was in the foreclosure process, you have to be able to let the dust settle.
Yep.
And then get back to work.
Yep. There's beforehand. That's a good point.
Yeah.
Say I'm going to get on this. If you're opposite of procrastinator.
Yeah.
I'm going to get right on this. Well, really, until it's sold.
Until it's sold.
We don't really have anything we can do.
Absolutely.
Okay.
And so that's where we'll come in and we'll say, look, okay, how are your credit cards? What else happened? Because that's usually the problem. Is it's not just the foreclosure. They had medical problems as a result, which spurred that was the whole problem. A child was sick. Or they lost a job. Yep. So we say, can we build up that other portion of the formula? Can we get those revolving balances low? Or can we, they may have closed them. Can we go open up some new ones? Let's work on getting rid of or negotiating the debt that you have.
That can be sometimes the hardest thing when someone's been through bankruptcy or foreclosure.
Yeah.
They say, I got burned. I'm never touching those things again.
Yeah.
And they come back after 7 years and say, let me try it. With not one new credit on there.
Absolutely.
And we need to get some credit back on there.
Yeah, you talked about codes earlier. The credit report that it's going to produce, whether it doesn't matter which bureau it is, it's going to come out and it's going to say lack of recent revolving credit.
Yep.
Which means for everybody that's out there that's that says, hey, I don't want to have credit, there is a formula there that says, how well do you use it? And do you have it? And you get rewarded for using it well.
Yep.
So that's what we do, is we really try and build a game plan for the foreclosure.
So let me just, so what you just said, credit reports don't always analyze just the negative.
Exactly.
It's going on the positive too.
Exactly.
And so that's what you're doing with you and your company, is that it is not only let's fix the negative, but let's help create the positive.
Exactly.
And understand the algorithm and the codes to slightly manipulate it to make it work in your favor.
Yeah, absolutely. Think of it as why my score is not higher, as opposed to, why is it so low?
Yep.
Why is it not higher? Well, let's spin on that, a positive, which is I'm going to use credit the way we talked about it. Hey, I'm going to pay it off every month, but let's be smart about the way we use it. Maybe, like Tom suggested, raise the limit, or use the ratio balance that is appropriate in terms of what you have. The other is installment. We're not big proponents of debt, but in the event that this happens, you have to rebuild.
You have to show some sort of ability to repay.
Exactly.
Now, Dustin, we have just a few minutes before we're done. Would you do me a favor and just tell us your favorite success story over the last 3.5 years with your company? Just give us a couple minutes of your favorite success story.
Well, that's a great question. There's one that's at the top of my mind, especially this time of year. My business partner, Stephen Palmer, about 2 years ago, we received a request to go contact a prospective buyer, somebody who's really interested. We found out that this individual was living in a hotel room and was a veteran. And so my business partner said, hey, I'll go. He didn't have internet access. He didn't have the ability to communicate with us that way. And so Stephen went and visited him in his hotel room, sat down with him, had the credit report with him that they'd pre-pulled, and sat down and walked through his story. Told him about his life, what he has done and accomplished, and what his end game was, which was, I want to buy a house. I've worked really hard. Look where I'm at. I'm paying to stay in this hotel, and I want to own a home. And so Stephen worked with him just to review the credit report, because we don't accept everybody in our program. And that means, like I said earlier, we may in some cases say, hey, look, go do this first. Let's work on these life skills first, budgeting, let's pay down some debt, and then let's get aggressive with going after these items. In his particular circumstance, he was ready to go. And went through the program, navigated it very well, because it takes a lot of what he can do combined with what we could provide. And a couple of months ago, we actually received an email or a letter from him with just a thank you card of the sense of I was able to purchase a home. And that story, above all, really makes me look at a situation where I can say, hey, look, I wanted to start this because I had a really bad experience with it. And if I could just get one other person, even one other person, to say, hey, look, I know that there's something I can do about my credit if I've been wronged, or even if I haven't, then that's a win for us. And so just hearing that was a big deal. And we get a lot of those. Interestingly, on our website, we track, at the very top, there's a ticker, and it changes every day. And we count how many people in a calendar year become credit ready. I
saw 547 yesterday, by the way.
Yeah. So that we don't, we've helped thousands of people, but we want to know about the ones that they came to us and said, this is what I want. And then they come back and they tell us this is what they did. And we track that. We'll say, congratulations, you're number 558, but that's bigger to us because you were able to get what you wanted in the end as a result of going through this program.
Dustin, we got through about a third of the list on my sheet here.
I apologize. Long-winded.
No. What I'm wondering is if maybe in a few weeks we have you back.
Absolutely. I'd love to.
Because there's so many other little things to talk about and bring some of your success stories and so forth. Our hope, I'm looking at Dustin when I say this, our hope is that come see me. Let me get you started. I'll do my part. And then for the appropriate person, the appropriate time, I'm going to say it's time for you to go and talk to my friends at Premier Credit. Have them take it. And the coolest thing about this whole process, you talked about budgeting, you talked about all sorts of other facets, and we're trying to cover every single one of them. Oh, yes. I'm just reminded I need to get the phone number, too. That's right. The process is that get started. Whatever it is you're worried about, whatever it is, don't worry about if you think you're coming in the underwear, kind of thing. It's like going to the doctor, all we want to do is help. In fact, it's kind of fun listening to your story. You actually, everyone who goes through college or any sort of, they graduate from high school and do the thing, what do I want to do? They want to help people. You actually get to.
Yeah, it's every day I wake up and I say, all right, look, I get to go to work today, but the number one driving force is I get to help people. Mm-hmm. And working with individuals such as yourself, Tom, it's the most rewarding thing because they get to buy a house.
Yep.
And so we've worked with a lot of really good people, and I guess that the one thing that I can say is this: when I hear people say, "Hey, look, they have bad credit," or they've got a lot of debt, or deadbeats, mm-hmm. right? It's just not that way anymore.
Right.
We run into people all the time that just say, "Hey, look, I lost my job.
Mm-hmm.
My son got sick," or I had twins back in April. Mm. They're 8 months old, and we spent 2.5 weeks in the hospital.
Mm-hmm.
And so that's a game changer.
You bet.
And so it is. A resounding message of come see Tom, learn a little bit more about your credit profile. And I assure you, having somebody in your corner to help you out is a big deal.
The other thing that people might be wondering is, what does it cost? And let me just quickly address that, and then we'll finish. Everything initially we're talking about, sitting down and chatting, it's free. I'll do all that for free. Premier sits down and looks at it for free. And then when it sits down and it actually all said and done, I'm told by you and your company that it's a 4 to 6 month process, maybe a year,
mm-hmm.
and overall cost is generally $300, $500, $600.
Yep.
Right.
And they're all assessed after billing periods after the work's complete. So what's nice about that is you can come in and say, hey, look, I really want to get after this, free consultation,
mm-hmm.
right? You didn't pay anything. You can get started. You don't pay anything.
Yep.
We'll go to work for you. And after a period of time, sometimes 30 days, that's typically how we're billing our clients is after a 30-day period, we assess a fee.
Mm-hmm.
And it's for the work completed that month, and there's no long-term commitment.
Yeah.
So it's a fun thing, and we're grateful for the
Awesome.
relationship we have with you, Tom, to be able to provide the services.
And I can't tell you how much fun it is to have somewhere to send people that it really gets it done. And again, thanks for Monroe's phone call. That guy is just awesome. So you've been listening to Tom Stone, Dustin Grimnes here on Talking Dollars and Sensibility, KTM 1340. If you want to contact us, it's 435-654-9979, and I'm located in the Tate Building, right on Main Street, 175 North Main, next to the car wash. So anyway, again, thank you so much for today. We'll have you back, Dustin.
Thank you very much.
All right.
My pleasure.